red rock. It's turned itself round from the bottom of the market, from a company that was not independent of its environment, didn't have cash flow, and so had sometimes to raise money from the market, and had operating overheads reflecting quite a large payroll. We got rid of the payroll. We reduced our costs to bare bone, sublet office space, where we actually made a profit, and we pushed strongly over a period of years to bring in revenues. And at the moment, we have revenues from, first of all, our stake in Jupiter Mines, which acts really just as a conduit for revenues, a flow-through vehicle for revenues from the Chipi manganese mine in South Africa, where we've been part of the development of that. It's been open 3 or 4 years, third biggest manganese mine in the world, probably the cheapest, certainly the longest life with about 100 years life, and currently giving us in dividends. This year it'll be £750,000 or so, but on a running basis, 500,000 with a slight upward trend. Now, at the moment, it's generating a huge amount of cash flow because the manganese price is pretty strong. But even at what we think is the long-term manganese price, that business, Chipi, will throw off about $100 million plus free cash flow a year. So that is here. We have got another revenue-producing asset, we believe, because we invested in Steelmin. We put in the last money in order to bring that into production. And our manganese, 95% goes into steel making, and so we felt quite familiar with the business of Steelmin. We understood it. It's ferrosilicon, and the ferrosilicon and ferromanganese businesses are, obviously there's a link with the manganese production here. The ferrosilicon, that's silicon going into steel as an additive also. Bosnia has very cheap hydropower up in the mountains, which is why Yugoslavia was a producer back in the 70s and earlier of ferrosilicon. Even with very cheap power, 50% of the costs are energy. It also has their native supplies of very pure quartz and of some of the other things that you need to make that work. So we came in, there's a good team, a really good team, developing that mine, bringing it back into, that plant, bringing it back into production. Should be open the end of the year, producing ferrosilicon, supplying most of Europe's big steel producers. And we did a back-to-back loan. We borrowed the money, we lent them money, and we got 16% of the business. That's now 18%, but increases at 1% a month to give them the incentive to repay. But as soon as they're in production, they can get trade finance, and they'll be able to repay us. So at that stage we'll be left with, we reckon, just over 20% of the business, where from the first furnace, which will be brought on stream then, there'll be an EBITDA of about 7-8 million euros a year. And we'll have 20% of that for nothing, because we'll have got all our money back. And then they will immediately try to self-finance a second furnace to bring on stream. So that, we think, is a very successful investment, and we'll get a good return. We went in on the basis of $11, $12 or so price for ferrosilicon. The price in Asia is now at about $18. Europe is a bit of a separate market, but it's crept up to about $13.50. So those EBITDA figures may turn out to be quite conservative. So, we should be getting an EBITDA share of considerably in excess of €1 million from that, in addition to our dividend stream from Regency. And our third source of funds is Colombia, where we put money in, developed a gold mine, realized we weren't specialists in narrow vein deep mining in the Andes, and so we sold to people who were, and have taken our return in stages. People thought that we were selling cheap because the asset was rubbish and we'd never get our money back, and we were doing these long dated payments to us because we couldn't get the money and people would have forgotten about it. But they've been coming through, and now there's only one 775,000, not million, which will be coming to us next year. And the royalties have been running at quite a low rate, but this November we expect it to be $30,000 or $40,000. and the quarterly payments thereafter should be running at the rate of $90,000 or more. So that will be about $360,000 we estimate in the course of a year, maybe more. So we're getting £250,000 plus from that as well. So 3 quite stable revenue sources, which completely transforms Red Rock. This is we went a bit ahead of ourselves, but this is Steelmin, and again this will be up on the website. We're doing a shareholder visit to Steelmin next week. Several people here will be there, and when we come back I hope everyone will say how impressed they are, because they ought to be. Stoats Creek we're still sorting out in the United States. Relatively small investment in oil production in Louisiana, and we will talk about that when it starts to come through. This is Colombia. Now, what we announced yesterday, and the reason I thought it was worth saying 1 or 2 things about this, is we announced that we had signed an option to invest in some cobalt copper tailings in Congo, near Kolwezi, near the Zambian border in the copper belt. These are pretty rich tailings, and if you look at our announcement, you will see that, and do some maths, you will see that potentially this is hugely profitable. I mean, you're talking about a price for cobalt of $60,000 or so a ton, and of copper about $6,400 a ton going up, and the amount of material we could have there on the 22 million tons of the first 4 tailings is potentially about $4.5 billion in the ground. We have to test that. That's what's been represented to us. We're of course going to do that test work in the due diligence period. That would cost about a little bit more than 10% of that to extract. And so then after that you have royalties, taxes, the share of our partners and so on. So it'll still be an extremely profitable project. If for any reason the commercial value of what's in these tailings isn't good enough, then there's another 50 million ton tailing in reserve which would be added in. There is it's half a mile on tarmac road from Kolwezi, sort of half an hour, and there's 700 meters of dirt track then to get you straight onto the tailing. So we're going to have a truck-mounted auger drilling that like a gorgonzola during the due diligence period, and I'm hoping that we can get enough data from that we will not only be able to do the due diligence, but we'll be able to use that data in the wet season, which is the next few weeks after that, to generate an inferred resource. We have, I should say, 1 or 2 other listed companies that want to participate with us in that, and we've also had, since announcing it yesterday, a number of approaches, people anxious to give us money, and some of them being private sources. I mean, we're stock that obviously wouldn't come back on the market. So I know some people will say, well, you know, where are you getting the money for that? Believe me, that isn't the problem. Even the people selling this to us, if we exercise the option, they would rather have had shares than cash, only we don't want to give away our shares cheaply. This is the cobalt price. This is in dollars per pound. The price per ton has gone from about $20,000 to about $60,000 this year. It doesn't look to me excessively expensive, because this is the demand Bloomberg New Energy Finance are assuming for EV lithium-ion batteries. And cobalt, it helps the battery keeps its charge, therefore directly improves the range of electric cars. And electric cars, whether one likes them or not, or thinks they're technologically superior or not, it does appear they're going to take over. Again, Scott has strong views on this, and Scott has driven Teslas, and you can ask him questions about it if you wish later. So we think this is an extremely interesting thing that could dramatically change the value of Red Rock. Red Rock is incredibly cheap in our view just on Jupiter, incredibly cheap just on Steelmin, pretty cheap on the Colombian gold, and if this works, then it is just a fraction of the price that it should be. So I think we haven't been given credit yet for the dramatic turnaround we've achieved at Red Rock, which is only a 3.6 million pound company. But Jupiter, we are selling to the best companies in the world. When we were thinking about selling the business earlier this year, it was the best companies in the world that were thinking of buying it. Steelmin, we are supplying the big steel companies of Europe. Gold in Colombia, I suppose we're selling into an international market for gold. But with the cobalt, we are going to the place which has more than 50% of the world's reserves of cobalt and more than 50% of the world's production. So we are going to to cobalt central. Unlike a lot of the companies that are talking about cobalt and doing things in cobalt, we are going to be in the place where it really counts. And we're in good company in Congo these days because we will be next to Glencore, a big Chinese state company. Ivanhoe are doing a big project there. Rand Gold, as you know, have opened a big gold mine. So incredibly exciting times for Red Rock, which I would say is 6 months to a year probably ahead of Regency, but we're going to turn that round too, because our record is that when there's a bull market, we really make these companies grow. What we have to avoid is giving it back in the bear market this time. Red Rock, from 2010, the next couple of years, it went up 60 times. We want to do something similar with it this time by seizing the opportunities, because there is a tide in the affairs of men, and there's a tide in, as we know, in commodity markets, which if you're positioned correctly, fortune favors the prepared mind. We've prepared our minds. We're taking the opportunities. We think we're in the right areas, and Red Rock is our tip for the next year.